What's up, folks? How you guys doing? So let me check if everything's working. So TikTok should be fine. TikTok should be fine. YouTube as well. Okay, boys. Let's go. I would say let's dive right into the charts, okay? So starting off at the weekly chart, a brief high time frame analysis to determine our bias. So yeah, on the weekly chart, it's kind of difficult to say because already taken sell sides. Okay, we traded up into new week opening gap, this weekly volume imbalance, like I outlined last week and the week before. Like as I predicted it, perfect trade up into it here, used it, and now we're trading lower. Okay, so yeah, as long as we don't get above this weekly volume imbalance, I wouldn't be aiming for the all-time highs. Okay, it gets a little bit clearer on the daily chart. As you can see, we took out buy side here, failed to trade up into this daily fair value gap here. Okay, so let's do it the right way. Okay, failed to trade up into daily fair value gap. Tried it several times, wasn't able to reach up into it, but we took buy side, and then we had this huge discount opening, this huge gap. Okay, and on last Friday I told you guys, okay, we are likely to see a huge dump during the New York session. I was live streaming during the New York session, and price was like here, around here, and now we also did a high time frame higher time frame analysis, and I predicted or anticipated price to trade down and take at least Thursday's low and maybe as much as this low, because this fair value gap was a draw and we trade down into it. So this week we had a little premium gap. Okay, so this close and this opening candle, there's a little gap, and now we are at Thursday's low. So maybe we could see something like immediate rebalance, where price trades up into this wick and then dumps. I'm definitely more bearish than bullish, because my bias is that we in fact use this fair value gap here. There's a volume imbalance above and below, so you want to include them when drawing your fair value gap. Okay, so I want to see this fair value gap become an inverse fair value gap, so it could look similar to, yeah, trade down. Oh, okay, trade down into midpoint of fair value gap. Now trade up higher into this wick here, quadrant levels, into this wick low, maybe immediate rebalance, we will see, I don't know, and then trade lower, use it as an inverse fair value gap, and trade down into this weekly volume, new week opening gap slash weekly or daily volume imbalance. Okay, so that's a plan, that's my bias, that's what I'm anticipating. Also, I would recommend you to monitor this fair value gap here. So we traded up into midpoint. That's actually enough, okay? So traded below it. We traded below this fair value gap here, trade below it, came all the way back up higher into now more or less midpoint. And this is the point where we could see now the movement lower, okay? So yeah, that's a plan, that's a bias. Bias definitely bearish, as I outlined. So what you guys want to have on your charts is definitely you want to have this wick. So take a fib, put the quadrant levels on it, and just extend it and use these levels on intraday chart. For example, on a 15, 5-minute or 1-minute chart, these quadrant levels will be important, and also how we trade inside of this fair value gap, okay? So if we just stay in the lower half of this fair value gap and don't even trade up into the upper half, that's bearish. So if it stays like this and now we reverse from here and go lower, this is something I want to see personally. And yeah, of course, that's a draw. Is it realistic that we trade down to it today? I mean, nowadays everything can happen, but that's not realistic for today's New York session, okay? So yeah, we gotta see. And yeah, I would say let's dive right into the 1-hour chart. As you can see, 1 hour already has these relatively equal lows here and here, so we have definitely a sell side. Traded up now into the midpoint of this daily fair value gap. As you can see on the 50-minute, reversed, or now I cannot say reverse yet, but seems like we definitely see a bearish reaction off of this daily fair value gap midpoint here. So we have pre-market sell side, which I think could be the draw because we've taken out this. No, okay, this buy side. We didn't take out this buy side, but here, buy side definitely was taken here. This still is intact, so yeah, I mean, that's enough, okay? We don't need this buy side to get swept and then move lower, okay? This is actually perfect. So on a 5-minute chart, you can see these relatively equal lows here and also these lows here, okay? So yeah. Okay, we have, it's 9:25 and 5 minutes we have 9:30 opening. And yeah, let's see, where did we close yesterday? At 9:14 p.m. Okay, around about here, okay. So we have a huge premium gap opening. So I'm talking about, okay, let's delete these levels and turn off. Okay, no, don't turn it off yet. We want to map out all the important liquidity pools. So we have pre-market high. Bro, come on. So we have pre-market highs. We have pre-market lows. Okay. London It's maybe too far away now. So now let's go back, or let's switch to regular trading hours. Give me a second. Let's switch to regular trading hours. If you trade Forex or CFDs, then you won't be able to switch between regular trading hours and electronic trading hours. You can see it on the right hand side on the bottom in the corner. There it says ETH or RTH. You can also go to settings, symbol, session, and switch here. Okay, so if you're not trading E-mini Nasdaq and you're trading NAS 100, which is a CFD, or you're trading US 500, or you trade Forex or whatever, you don't have this option. So, but you can do it nevertheless. Just go back into Friday's PM session, go to 4:14 PM close, take this closing level, go back to today's 9:30 opening, which is in 1.5 minutes. And then you want to take these levels, extend it to the right, and just put a fib on. And there you have your opening range gap. Okay, so where's the close? So we have a huge opening range gap. Of course, we still don't have a 9:30 opening price, but 9:30 opening price will be around here, whatever. So yeah, daily bias is bearish, intraday bias kind of difficult because we don't want to pick the bottom in a bullish market, and intraday we are definitely bullish. When we go back to the 50-minute chart, we do higher highs, higher lows. Okay, so technically you don't want to be the one who's picking the bot at the top in a bullish market. Okay, so yeah, we don't want to pick the point where we say, okay, it's definitely going to reverse here. Okay, we are bearish, bias is bearish, but we are trading higher all this entire day. We went to the upside, so we don't want to pick the point where we say, okay, there it is going to reverse. Okay, so we want price to prove that it wants to reverse. So we stay patient and maybe look for something like a market maker sell model, where this is original consolidation, trade up higher into daily fair value gap midpoint as outlined in the beginning. I just deleted these levels, go back to your daily chart, and November 13th, this fair value gap extended to the right. We are trading around the midpoint. Okay, so there we anticipate a reversal, but we don't force a reversal. Okay, we want price to prove itself. We want the reversal to prove itself. We want to see confirmation. Okay, that's what we want to see, and therefore we are going to wait. We don't force a trade. We stay patient and see what price is wanting to give us. Okay, that's a plan for today. Daily bias is bearish. We have sell sides on intraday chart on the 15-minute, clear sell side. So we wait and see. Yeah. So See if you go now to regular trading hours. There you can see this huge gap, okay? If you trade Forex, again, if you trade Forex or CFDs in general, like NAS 100, you wouldn't have a visual gap, but you can just take these levels, yesterday's 4:14 p.m. close and today's 9:30 open, and just extend it to the right, and you put fib levels on it, and you just have the same. You don't have the gap visually, but it doesn't matter. You have the same levels, okay? That's what's important, okay? So a huge premium gap. What's what I mean by a premium gap is we gapped higher, okay? So today's opening is higher than yesterday's or Friday's close, okay? That's a gap higher, which is a premium gap. Vice versa, if we had opened lower, that's a discount gap. Okay? So yeah. Okay. So let's go back to electronic trading hours. Delete these levels. Okay. So pre-market lows already taken. Yes, no, soon. A little bit more. Okay, there you go. There's a bearish bias. Says it already delivered, and I was right about the reversal point. Okay, we are November 13th, daily fair value gap. Put the fib level on it. Midpoint is around here. Okay, so again, moved higher, took out buy side, trapped retail trader long on a breakout, stop them out here. Okay, so now I think we are going to continue lower. Okay, that's huge. That's a huge volatility influx. Yeah, these candles are huge again, bro. Come on, 42 handles. Okay, so I wasn't expecting like this kind of volatile. This it's kind of enormous, bro. Look at these small ass candles, and then you see like, damn. Okay, so buy is already delivered. Okay, and yeah, let's see. Okay, pre-market lows taken. Next buy side also taken here. Next buy side is London low. Okay, I think we could see it happen. As I told you guys, we could see a market maker sell model. London is original consolidation, and yeah, let's see. Let's see. Yeah. Um, what's up, boys? What's up, people on TikTok? BBC Trades. What's up, bro? Yeah, okay. What's the draw? London low. I guess we can. London low. Put it to the right. Okay, perfect. Pre-market lows. do it beneath and to the right. Yes, sir. Okay. So yeah. First percent fair value gap. Obviously this one. So if we are bearish, we want to see this fair value gap to keep price lower, okay? If we trade above it, we are more likely to go for these highs and maybe continue higher. We could see something like close above, use it as an inverse fair value gap, take out these highs, maybe something like this, and then a market structure shift lower. But I would prefer price just dumping from here, okay? We already tricked retail trader long, okay? On a breakout here, they thought, okay, we are bullish. We had a huge gap opening. We had a huge opening above yesterday's or Friday's 4:14 p.m. close. Had a huge premium gap opening, then um, a huge run up higher before 9:30 opening, and yeah, people definitely went long in here, and stop loss below last resistance or support, which is here. Okay, so everybody long got stopped out here. Now we use this fair value gap as a bearish SIBI, bearish fair value gap, and this is what I want to see. We don't need to trade up higher again. We want to see price just dump. Okay, so London low is right here. Yeah, bro, for me personally, it's just too volatile at the moment because, bro, these handles, if I want to go short from here, my stop loss would need to be here, bro. 40 handle stop loss. That's too big for me, honestly. Hmm. Bro, just reading price action is just so fun if you are more often than not correct in your analysis. Bro, it's just funny. You predict price and price just does what you expected it or anticipated to do. So yeah, it's nice to see the progress in terms of market understanding, price reading, price action and stuff. Okay, so damn, bro, we're really heavy. And the reason why we see this kind of a huge dump, I mean, what tells you, or what is price telling you right now? Bro, price is just dumping to the downside real quick. I mean, look at these candles, okay? And if you go back to the daily chart, and this is something I already mentioned or outlined and yeah, outlined in the previous live stream on Friday. I told you guys this huge gap lower is a telltale sign or should be a telltale sign for you. Why? Why was I expecting price to dump from here? And also from here, I told you guys we were trying to reach up into this fair value gap several times. Once here, first, second, third, fourth time, wasn't able, and then had a huge gap lower. Okay, that's telling you guys price has to get somewhere really quickly. Okay, so it's urgent. Price wants to get somewhere fast. That's this is what this gap lower told me, and I was correct. Okay, price just dumped. Look at this huge down close candle, and still I don't think price is going to reach up high into it the next few days, because we have this draw on the downside, and these gaps can stay open for a longer period of time. So this is just telling to you guys, okay, price wants to go lower, and it doesn't want to just go lower, it wants to completely just crash to the downside. Okay, and I guess that's also the reason why we see this 9:30 opening. Okay, yeah, I mean, like I told you, could take it as a short, but for me personally, bro, it's just too far of a stop loss, bro. 42 point stop loss. I mean, I'm just I'm just comfortable with it, with a 25 point stop loss, at max. Okay, I don't want to have a bigger stop loss than 25 points, because one micro equals to $50 risk, and I think personally for me, $50 risk is just a comfortable amount of risk for me personally, where I don't stress if it pans out or not, if I get stopped out, or if it hits TP. Okay, so that's comfortable for me. But risking like almost double, I don't know. I don't know. I don't know. Okay, so London law, London law is the target. I mean, if we hit London low, where could it reach for? We have these relatively equal lows, but bro, they're kind of far away. I mean, it could do something like that easily, but um, yeah, let's see. It has to reach down for London low first. Well, that's actually a beautiful trade. I'm contemplating if maybe I put on bigger risk. Because even on last Friday, I missed beautiful trades that I outlined and predicted beforehand, and I missed them because, okay, on the first, I mean, if you want to go to, maybe after this live stream, you can check it out on my last live stream on Friday last week. I think it was December 12th or 13th. I don't know. I also missed beautiful trades because just recently 9:30 opening, bro, the volatility is just insane. And if you don't know what you're doing, bro, you get wrecked immediately. So, yeah, maybe I put on more risk. That's at least what I'm contemplating. So, because the thing is, for example, if I trade with a stop loss of 25 points max, with today's volatility, I can only trade one micro. And sometimes my draw is, for example, is not correct. But you could for example, if you trade two micros, you could have taken partial profits here, okay? But if you trade only one micro, it's even more difficult to hold on to your trade for about, in this scenario, almost 100 handles, okay? I wouldn't do something like that. I would take definitely partials at logical levels, okay? For example, here is the lower quadrant of the opening range gap. That's a reasonable logical level that I would be taking profits at, okay? But trading with one micro doesn't allow you to take profits, because if you take profits, bro, you're out of your position and you cannot leave a runner on. And for example, yeah, this trade also I could just take one micro and not two, because two micros with this kind of big stop or big of a stop loss would be too much. And if you guys don't know what 1 point is worth in the micro Nasdaq, if price moves, for example, like this, that's 1 point. This kind of movement is 10 points, okay? And 1 point is worth $2 in a micro Nasdaq. You also have the E-mini Nasdaq, not the micro E-mini, but the mini Nasdaq, which is the normal Nasdaq. And 1 point in a normal Nasdaq NQ is worth $20, okay? Micro Nasdaq is just his little brother. I would see it like this. And yeah, I mean, $2 per point with a stop loss of 40 points equals around about $80, which is, I don't know. I would say maybe I would be comfortable anywhere from 50 to $100 risk per trade. But yeah, it's kind of better for your emotions. You don't want to stress or be stressed when you're in a trade. And for me personally, like I told you, 50 handles is like a sweet spot, I would say. 25 handles. Weiß schon das Finanzamt darüber? Okay. So London low is a draw. Come to daddy. Come on. A little bit more. Or you could even do something like this. That would still be that would still be reasonable TP, but you want to take low hanging fruit. So best case scenario, you you've already taken partials, okay, and reduce your risk from here to here, or even to break even. So if I was in this position, that would definitely be a risk-free trade. If I had shorted one micro, I don't know if I would be still in the position, or maybe like exited here. Opening range gap lower quadrant is around here at this level. Okay, so we had this fair value gap, trade up into it, but only wicked into it, close lower, lower, had a little retracement up into where? If you go back to the beginning of the month, the first New York session of this month, first New York session in December, price traded up into the first percent fair value gap, first percent fair value gap of this month, high, okay? So this is something ICT taught you guys. You want to extend the first presented fair value gap of the month, of the week, and obviously first presented fair value gap of today's New York session open. Time-based PD arrays, okay? That's a huge topic. Come on. We are inside of the macro. Um, uh, uh, yeah, I guess. Nah, bro. Technically, yeah, we hit TP, but if you if you were short, you definitely wouldn't be filled here, okay? It just went to the tick to your TP, but it needs to trade through it in order to fill your TP order. So there you go. Now you would be filled and taken out of the trade. Beautiful trades, predicted beforehand, outlined beforehand. Again, unfortunately, nah, not unfortunately. I just didn't take the trade. It was just too volatile for me personally. Which again, bro, it just happens too often recently that I see beautiful trade setups and I just can't be part of it because my rules say don't risk more than 25% points. Maybe, I don't know. Maybe I should. And TP2 hits opening range gap low. Yesterday's 414 price, closing price here, also hit. Like I told you, you could also, I said, you could also put your TP at this price, which is also a reasonable TP. For example, if you go back to regular trading hours, as you can see, this closing price was hit here, okay? So, beautiful trade, definitely. Maybe I should just say, I don't know, fuck it, and just take these trades, even though I know they are more than I am willing to risk for now. But yeah, maybe I should just climb away higher into getting comfortable, risking more. I mean, one macro, 40 points times 2, $80, $80 times 2.8. We would be up about 200 bucks right now. Well, we could have made 200 bucks on this trade. Yeah, I guess. I think I'm going to, after this live stream, I think I'm going to change my rules. Maybe I'll say something like, yeah, max 50 points, but only for New York session. Because during London, bro, you don't see this kind of volatility. For London or yeah, every session of the day except for New York session, for example, Asia, London, or PM session, lunch session, 25 points is definitely good, a good rule of thumb for your stop loss. But bro, it's definitely not enough for a New York session. Bro, as you can see, if you go back to electronic trading hours, bro, I mean, I could have gone probably long here and 25 points. I could I could have longed here and put my stop loss below this low here, and it would be more or less 25 points. And I mean, we have a high, a low, a higher high, a higher low, and a higher high. And here we have one candle. And it's, come on, bro. Yeah, crazy price action. So, yes, sir. Price delivered perfectly. TP hits. So now where could it draw to next? On regular trading hours, you have these lows here. This is last PM session low, okay? That's an important liquidity pool. Yeah. I mean, if you have taken this trade, bro, be content. That's enough. If you catch this trade one time a week, that's already enough. Bro, you would have made, yeah, kind of depends on how much you're risking, but you could have made, I don't know, let's say almost 3% with one trade. Bro, 3%, if you do that one time a week, you have 12% month. Bro, 12% per month. Bro, people are fighting for like 12% a year. Okay, bro, if you go to stock market and you just say, okay, I take my money, I invest it in this, round about 1 year later, you have on average 10, 12% profit. Bro, you can do it 12 times that in a year just by taking one trade a week. Bro, and it's not, you can, that's not difficult. If you trade, if you know how to trade and you are in this business, or like learn you're learning trading for over 1 to 2 years, you definitely have the, or you should have, or I think, okay, maybe you can't say you should have, but it's definitely in the realms of realistic that after your first 1 to 2 years, you're able to catch this kind of a trade one times per week. Okay, I think that's possible, and it's not swinging for the fences. It's not too difficult, and it's not like, how would you say? I mean, I guess this could be a reasonable target for every beginner trader. After 1 to 2 years, you should be, or you can be able to take home these types of trades at least one time per week, and that's already enough. Okay, one time per week, 3%, bro. I mean, this is even, bro. This is huge. That would be huge progress. That would be insane, actually. Of course, you also would have had maybe, I don't know, maybe you tried 3 times, maybe you shorted, or you took 3 day, you took 3 trades a week, 2 hit stop loss, 1 hit a 3-to-1 risk to reward. Okay, two two times 1%, so you would be minus 2% on your two losses. Then you would have had one win, a 3-to-1, and you would be up 1% on the week. Okay, 4% in the end of the month. Also, bro, in the beginning, in your first 1 to 2 or 3 years, that's great. That's great. Okay, so TP hit, next draw, this Sasa liquidity pool. Full TP oder was? Bro, uh, actually, so I didn't take this trade. I outlined, I said to you guys, okay, you can take this trade, but I don't take it personally because, bro, my stop loss would have been like 40 points. And I told you, bro, 40 points is too big for me personally. I only risk 25 points max. So, yeah, bro, definitely. I'm contemplating if I maybe change my rules and say, okay, when trading New York session, I'm allowed to have an even bigger stop loss. But yeah, I need to think about it. Bro, you're in school. Yeah, bro. School. What should I say, bro? Keep hustling, bro. Get out of school, bro, and grind, bro. I know you're probably with your iPad on your desk, going through your mentorships notes or whatever, looking at the charts. Bro, beautiful trade, actually. Beautiful trade. Predicted it beforehand, but bro, just I don't know. Maybe I could helped some of you guys. Bro, I'm kind of tired. Bro, tonight was horrible. I don't know. I slept for like 4 hours. Then I woke up, left from left to right, to left, to the right. Bro, I couldn't sleep. Maybe after an hour, I just fell asleep again. But bro, I hate to wake up during the night, bro. Next days, bro. Okay, so now we traded below the opening range gap. Used um this 4:14 p.m.'s closing price, went a little bit above, wicked above London low here, which by the way, lows like liquidity pools are also PD arrays, okay? This is actually something I didn't realize in the beginning, but you should definitely extend your liquidity pools even though the liquidity got swept here, okay, here we have taken out this low, you should nevertheless extend your liquidity pools to the right. And as you can see, price used it here again, went up to the south side and then went lower again, okay? Okay. Hmm. Mm-hmm. Yeah, bro. That's unfortunate. And I guess I will be changing my rules for New York session. So, but 50 points stop loss is crazy. Um, maybe. Nah, bro, stop loss should be where it's at. So could have waited. Yeah, bro, but yeah, now it can it becomes kind of unrealistic, bro. You cannot say, okay, I would have waited until the top of the wick, went short here, stop loss here. Okay, that would have been 28 points. Okay, so maybe I could just, it would be okay. Okay, 3 points outside of my rules. Um, That's okay. But this is unrealistic. So bro, difficult, bro. I don't want to be trading with like a 40 points stop loss. Or nah, bro. Okay, so it would make sense if I say, okay, I want to go from risking 0.5% per trade, because even though, okay, sometimes where maybe my stop loss is, for example, 15 points, I don't trade one micro. Okay, so I always trade the right amount of micros through um, that equals $50 risk. Okay, so for example, if I take a trade long or short with a stop loss size of 15 points, I take a long or short with 3 micros, because that's almost $50 risk. Okay, so that would be a risk of, if you trade as I am with a 10,000 10K account. Okay, this is, by the way, this is demo. Okay, it's paper trading, but if I want to start with live money, I would take, I guess I would take 10K and put it into a live account. So because I mean, I would say 10K would be enough to open up a live account. Anything less than 10K, I think that would be, I guess that wouldn't be enough to properly manage risk and stuff. So I would say if you have 10K, that's a good amount of money to start live trading with. Okay, so and this is what I would do if I, or when I'm ready to start a live account. I would start with 10K, and for me personally, as I told you, I mean, I would be comfortable with risking $50, because risking losing or gaining $50, or losing $50, I mean, in the end of the day, it wouldn't be hurting me. Of course, it's not nice to lose $50, but I wouldn't see it or view it as, oh, I lost $50, bro. It's just a loss in trade wise, but I know I have the skill set to make it all back, so I wouldn't see it as I lost it. But um, yeah, it's just comfortable. I would say if I'm in a trade and I lose 50 bucks, bro, it's just okay. It's not nice, but bro, I'm not stressing out over these 50 bucks, you know? So, and I'm thinking about, okay, would I be okay with losing 100 bucks, which is double, but I don't know, because I wouldn't want to say, okay, I change my rules only for New York, because let's say I risk generally I risk 25 points per trade max, like in general. So for example, I take a trade in the London session. Okay, I take a trade in the London session where I say, okay, max risk is $50. Okay, 25 points. Let's say I win this trade, maybe 2 to 1 R. So I made 100 bucks. I have $100 profit. Then I go into New York session and maybe I lose a trade. Okay, then I would be like zero. Okay, and I don't want to have a good win, like a 2 to 1 R win, and then have just one losing trade where I'm allowing myself to risk 1% instead of 0.5%. So yeah, it kind of makes no sense to me, because I would have lost all my profits for this day. So if I say I also trade and risk a percent, like on every trade, also on trades during London session or PM session, that would make more sense, because if I take a trade on in London session, risk a percent and maybe a 2.1 risk to reward, I would have made 200 bucks. If I then lose a trade, I lose 100 bucks, but I'm still in profits. I'm still up 100 bucks. That's something I can work with, but I don't want to risk less during London, have a good win, then risk more during New York, have a loss, for example, and be at break even at the end of the day. So I don't know. That wouldn't make much sense. So PM session low also taken. Bro, I don't know. It's just fun if your analysis pans out, bro. This is something you could be aiming for if you trade more than one macro. Let's say you went short 3 macros. You could have first partial would be here, lower quadrant of the opening range gap. Second partial could be below this London low or this opening range gap low, which is also in close proximity to the London session sell side liquidity pool. So partial 2, and then you could just leave a runner on best case scenario this PM session low also hit. So you would have had a beautiful trade. Obviously now we are talking like hindsight perspective, but I mean this is reasonable. That's not aiming for the fences, or it's not like speaking hindsight where it's like really unrealistic, bro. This is definitely not unrealistic, bro. This is something you could definitely be aiming for. Maybe not in the beginning of your trading career. That is not something I would be aiming for personally yet. I'm not at this point where I could hold on to these trades this long. Maybe, as I told you, maybe if I have 3 micros short with a partial taken here and here, maybe, yeah, then I would leave a runner on. But bro, I would need to be able to risk, yeah, if I say 3 micros short, bro, you have a risk of um $80 times 3, 200, like about 250 points risk, and I'm not quite there yet. Okay, so um but yeah, eventually, maybe in a year or half a year, I don't know. And guys, if you go back to electronic trading hours, um this is something also we could aim for. Is it realistic? I was asking myself, is it realistic that we trade down into it here? I told you guys yes, but we first have to concern ourselves with London low, okay? This is easy. That's an easy target here, London low. And then you got to see how price is trading within this range from this low to this low, okay? And we have beautiful price action. I mean, went up to London low again, inverse for value gap, trade up into here, repelled lower from this inverse for value gap. I mean, beautiful price action, beautiful run to downside. Yeah, TP hit. I mean, But bro, I'm kind of tired of predicting trades beforehand, like outlining everything beforehand and then not taking the trade because stop loss is too big, bro. I'm just fucking tired of missing these types of trades, bro. It's not the first time, bro. It's like Friday that it happens. It happens. The previous live stream on Friday last week, missed beautiful trades because yeah, I kind of was hesitating. Am I risking that much? Mm, mm. Yeah. So it's 10:23. Still have more or less 40 minutes left until 11 a.m. That's a draw. Maybe if you go 15-minute chart. Beautiful, beautiful, beautiful price action. I mean, bro, look at this fucking. That's that's definitely something you can work with. Ah, come on. So, as I was also outlining in the beginning of this live stream, when we did our high time frame analysis, I told you I want this inverse or this fair value gap to act as an inverse fair value gap, okay? So what we want to see is price reaching all the way down lower into this fair value gap's low level and also reach even further to the downside. But yeah. Okay, so now we reach down into fair value gap low. We want to see close below. And then yeah, bro, difficult to say where it wants to reach down for. I mean, if we go back to daily, we also have fair value gap here, but yeah. Hmm. I mean, obviously, that's a draw for the week, as I also outlined in my Discord channel. So, if you want to, bro, why did my TikTok live stream just ended itself, bro? Hey, the fuck? What happened? Okay, live again. Okay, I don't know. So on my free Discord channel. So if you want to, I don't know, learn more about price action, get to know other like-minded people who motivates each other, and yeah, just like have a community of like-minded people. Okay, so if this is something you would be interested in, definitely check out my Discord. I do analysis every Sunday, tell you guys what I think, what the weekly draw is, and every time I see a setup, I also post it in there. Other people post their trades in it and explain why they took a trade. So you definitely can learn from other people as well, not only from me or bro. I'm not saying I'm like the the best trader out there or whatever. I'm just building my own community, guys, and provide you a place where you could just feel safe and be around by other traders. So yeah, if that's something for you guys, then check out the link in my TikTok bio or YouTube bio. And yeah, so weekly draw, this volume imbalance, and today's New York session. Bro, buy is already over delivered. Okay, so we reached down into pre-market low, London low, and even these relatively equal lows, which is Friday's low. Okay, so that would be best case scenario, um, as I outlined in the beginning of the live stream. So yeah, so now we over delivered, went even lower, went outside of the daily fair value gap from November 26th. And yeah, I guess everything you would be short on would be more or less chasing price. Okay, that's too far in a discount to take a short, in my opinion. Of course, not saying you cannot do it and end up in a profitable trade, but nothing I would be short from, in my opinion. I wouldn't do that. Yeah, so basically you had this opportunity to short here. Yes, we had bearish buys, and but I told you guys price should confirm that it wants to go lower. Okay, and in my opinion, price confirmed with trading up into this first percent fair value gap and trading lower. That's very telling. Okay, that's my confirmation. So this is the earliest trade that I could have taken for me personally. Of course, you could have also shorted in here, but personally, this is the only that's the first trade that I would be allowing myself to take. Okay, but like I told you, this is just that was just too big of a stop loss size for me, which is the reason I didn't take this trade. That would be the first short for me. Nothing in here would be my model that I would take a short from. Maybe here you could see it and view these two up close candles as an order block, which it is, but I would have preferred price to leave a fair value gap in here, which would have given me the confidence to maybe then take a short from here, but it didn't. So that's too tiny of a fair value gap. That's not a fair value gap that I would enter on short. So I didn't take this. So first short for me here. Second opportunity would have been here, this inverse fair value gap, and price trading up into it here. But At this point in time, we already have taken out London low. Okay, I told you we can see a dump even down into these relatively equal lows, but if you grade this price swing from high to low, this is already deep in a discount, okay? So that would be kind of best case scenario for me, and that would definitely be in a discount. So that's not a trade opportunity for me. So technically we only had one trade opportunity here. We missed it. Stop loss was just too big. So yeah, even if you said, okay, best case scenario would be a daily fair value gap low level, which would be around here, this short opportunity still is below the equilibrium, so it's in a discount. And when you short, you want to short in a premium, okay? Every time you want to, for example, you want to sell something, you want to sell for the highest price, okay? So if you sell your car, bro, you don't want to sell your car for maybe, I don't know, 10,000. You want to sell it for the highest price you can sell it for, okay? So you want to sell at a premium. And vice versa, if you want to buy something, you want to buy it when it's the cheapest. So buying a discount and sell at a premium. This is not selling at a premium here, okay? So my rule for trading, if I allow myself to trade and sell in a discount, you should sell in a premium. But if you sell in the discount, I would say I would be risking half of what I normally risk. And half of what I normally risk, I'm willing to risk normally 25 points, which equals $50. If I want to risk half, I'm only allowed to have a stop loss size of max 15 points, bro. And this stop loss wouldn't be safe, okay? I wouldn't be comfortable risking or trading, entering here and having the stop loss here, okay? That would make no sense, okay? And obviously in hindsight, it would have panned out, but bro, you would have never taken this trade with entry here and stop loss here, okay? If I enter here, my stop loss would be at this auto block high level, which would have been 43 points, bro. It's not easy. It's not easy recently with this kind of volatility, bro. Most of the times you only have like one opportunity real quick, 1 week where you could have entered on, okay? So maybe you would have had like 2 or 3 seconds here to enter a short, and then that would be too late, okay? I only want to sell when price is moving higher, okay? Why? Because when price is moving higher and I sell, I'm opening myself up to the lowest risk I could take. For example, if price is trading up and I'm selling, I'm probably get filled here. If I'm waiting for price to wake up higher and I'm hesitating and sell when price is even lower, when I sell here, I probably get filled more like around here. And now you went from a 40-point stop loss or like 38-point stop loss to a 50-point stop loss, okay? That's a huge difference. And this is the reason why I want to sell when price is moving higher and I want to buy when price is moving lower. Of course, for some of you guys, maybe that's anxiety inducing. Maybe this is you're afraid of selling when price is moving higher, because most people think, okay, they want to buy when price is moving higher, but you're opening yourself up to more risk. Okay, so Ideally, if you know how to trade ICT, if you are comfortable and you get comfortable over time with experience, seeing it over and over and over again, you get comfortable with selling when price moving higher. Okay, that's the best entry logic you could employ. Okay, at least you would get the lowest risk and the best risk to reward. Um, yeah, I think I'm not ready yet to open up my risk and change my rules from stop loss size max 25 points to a stop loss of 50 points. I think 50 points is too much for me personally yet. I'm not quite there yet. So I guess New York session is kind of too volatile recently for me to trade it, unfortunately. I mean, yeah, bro, even entering here, bro, stop loss, that would be too big. And I see no other entry opportunity here with a better um, stop loss placement. No, 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 no. Okay, trade all the way down into weekly fair value gap, daily fair value gap. Daily fair value gap low, too high. This is also something you should be journaling. Take these levels and see how price is reacting to. Come on, bro. What happened? Ah, okay. Journal how price is reacting off of these levels of the daily fair value gap. Okay, daily fair value gap high, traded down into fair value gap high, traded up higher into first percent fair value gap, dumped lower, used fair value gap high, went down lower, failed to trade up to trade down into lower quadrant, spend some time inside of or between these two levels, went down lower below upper quadrant, use upper quadrant here, lower, midpoint, crossed it, went above, went lower, fair value gap lays on top of this daily fair value gap midpoint. That's a high probability fair value gap, okay? This is the reason why I would have used this as an entry opportunity to short from. But as you can see, price went all the way higher to the tick, up into the midpoint, and then dumped again, okay? But stop loss, even, I mean, if I said enter here, stop, nah, bro. I mean, this is an order block, but yeah, we went lower, closed below its open, went higher. I mean, if you grade this midpoint from low, from open to close, midpoint mean threshold would be here. But gotta be honest, bro, I would have never taken this trade with this stop loss placement, bro. I don't know, even I don't know, even ICT wouldn't place a stop loss here, bro. That wouldn't be safe. So stop loss would have definitely been up here. Um, yeah. So daily fair value gap, use its midpoint here. Beautiful trade opportunity. For me, too much risk, but you could have taken this one, okay? So that's a beautiful trade here. Short. Used lower quadrants. Trade all the way up higher into this volume imbalance here. So if you take this gap, look where price traded into. Bam! To the tick! Beautiful. Lower traded around the low level, kind of wick lower, but it wasn't showing too much weakness. So yeah, now we are using this fair value gap, which is again fair value gap on top of this daily fair value gap lower quadrant. Okay, high probability fair value gap again. It is a high probability fair value gap, but is a high probability fair value gap that would be that you want to be short from? I guess you don't. Why? We were bearish, but this is a fair value gap at like the lowest discount points where you could have shorted from, okay, and you wouldn't want to do something like this. As I told you guys, best scenario would be from high to low, okay, to low of the fair value gap. For me personally, I said, okay, I guess best case scenario, price wants to trade all the way up, all the way down from here to here, okay, but price went even lower, okay, that's okay. But if you said, okay, daily fair value gap low would be the draw, so this is an implied dealing range. So if you delete these levels, an implied dealing range, what I'm applying here right now, is where price was, okay, price started here, highest level of today's New York session, high was here, so you take a fib, put a high onto the highest level, and then you put your low level of the fib where you think price is personally, in your opinion, going to go for in the best case scenario, okay? My bias was bearish, and in best case scenario, I thought price is reaching down from these lows, okay? And in this scenario, that fair value gap would be or lay on top of this low, okay? And if that low would be the best case scenario, you already delivered your buy. So why would you want to take this fair value gap to take another short from? Okay, that wouldn't make much sense. So yeah. Trade down to fair value gap low, and we now kind of reverse to the upside. So yeah, I mean, I guess we had a beautiful New York session. Missed one trade, and now maybe we have 10-50 macro in 4 minutes. So do we get maybe another trade opportunity? I guess we don't, but we might. Like I said yesterday, okay, a decrease of 15%. Bro, where can I see how much we how much percent we went lower today? Where can you see, like, I only sometimes if I watch other live streamers, they show these, I don't know, it looks like a table where all of the stocks are presented and you can see, okay, Tesla today made 2%, Nvidia lost 2% or whatever. Where can I see these? Okay, maybe we can go to, is it, can you see it on Trading View? Come on, Trading View. Market, community, world market, okay. Yeah, DAX plus 1.05%. But where indices? Tech DAX? No. S&P 500 minus. Nah, bro, that doesn't make sense. Bro, we dropped a lot today. Okay, no. Sorry, guys. We actually didn't drop too much because we need to see where we opened today. And we opened today here. Today's open was at this level. So we went all the way up higher, and around about here was the opening. So we are kind of where we opened. So we actually didn't drop too much today, just a little bit. Yeah, we opened here. Now we are here. Okay. Okay. Okay, so we are back almost at the opening price, which is also a new week opening gap. So everybody who's trading ICT knows what a new week opening gap is, I guess. You could also just take this indicator, so you don't have to do it manually. And as you can see, we open up today here, and this is Friday's close. So that's a new week opening gap. So maybe we could see something like a retracement up into new week opening gap. We are now in a macro. So we are inside of this high probability fair value gap here. Let's make it green. We are inside of this high probability fair value gap. Fade to trade up into the new day opening gap. But yeah, I guess I would prefer price to trade up into here, like into new week opening gap high level, and then maybe do another attempt to trade down low into these relatively equal lows, and maybe dump even further. But yeah, let's see. So if you take a look on today's, or not today's, on this daily fair value gap here, put the quick quadrant levels on it. We are back at its midpoint. Okay, so okay, I guess let's delete this. Bro, I hate it. Okay, let's just make it something like this. Yeah, I guess. Okay. Turn off the new week opening gap. Oh no, we can leave it on. Perfect. So I mean, I guess I wanted price to break down lower again, but like I told you guys, I would have preferred if price trades up into the new week opening gap again. And I guess we don't. I mean, this is actually showing even more weakness, but I mean, I guess when could we take something like this? That would be beautiful. Ah, bro, stop loss is huge again, bro. Come on, 36 points. Too much. Maybe we can do something like this. I mean, I guess that's not too bad. Bro, but in my opinion, price doesn't need to get up into here. Do we take a trade or don't we? Um, bro, but in my opinion, we are just still too far in a premium and a discount. But I mean, there's actually nothing against this trade except for the fact that we are still in deep discount, but I think price can make another attempt lower. But as I told you guys, price doesn't actually need to trade all the way up into here. I just need to take I need to put my limit order here because of my stop loss placement. I don't want to have too much of a stop loss size, and I guess hmm, bro, actually I don't want to take this trade. Do I? Huh. Yeah, I guess it's too late, huh? that's hilarious. It's 10:58. Hmm. That's not too high probability in my opinion. So do we? Nah, bro. It's 10:59. So stop order was somewhere in here. And yeah, we have 11 a.m. Now if we go back, bro, limit order would have not been filled. So yeah. Uh bro, definitely got to. I mean, yeah, I said price doesn't need to go up in here, and actually I don't want to. I don't want price to get up in here and stay weak. But this is just too big of a stop loss. So my stop loss would need to here. Nah, bro, that's. I would my stop loss at least to I would my stop loss. I would need my stop loss to be at least here or here. Best case scenario, stop loss here actually, and 37 points. Come on, bro, 37 points. Ah. And I mean, we missed all this beautiful. We missed this beautiful price run here. So there's no meat left on the bone actually. Maybe a little bit. I guess that would be still a good idea to take this trade, but bro. Oh, bro, this volatility is making it hard for me. I mean, what's the solution to it? That's a question. Yeah. So that would be the worst trade opportunity here. When you compare it to this short here and here, we still had room to the downside. Okay, we hadn't delivered our buys, our draw. So every short opportunity definitely is high probability inside of this price ring right here. Now buys or draw was delivered here, so we could definitely see now a retracement to the upside. I mean, we also lunch macro starts at 11:30, and lunch macro hits really hard when we had a really one-sided, one-directional New York session. So when a New York session looks like this, where just one-sided, just moving lower or higher, in this case just dumping to the downside, no real retracement to the buy side, to the upside. In these types of market environments, you want to start looking for a reversal doing lunch macro, okay? So that's not, as I told you, the best case or the best short opportunity here. So price is rather wanting to retrace higher, deeper into this range, maybe all the way up high into new week opening gap, as much as opening range gap. Whoops. As much as opening range gap lower half. So yeah, I guess that's it for today, guys. I'll catch you in the next one. Live stream tomorrow, same time. So see you guys tomorrow.